Hello traders, Gary Wagner here, just after 12:30 in Honolulu, 6:30 in New York. It is Monday, December the 11th, 2017, and this is the Daily Report for Gold and Silver. More downside pressure in the precious metals markets as the risk-on environment has favored equities, with gold trading off about $4.80, closing at $1243.60. Silver lower by about 10 cents at $15.72, and that all with a fractionally, modestly higher, I would say unchanged US dollar at 93.95. Now, we did have new record highs in both the Dow Jones Industrial Average, which closed at 24,386, putting it up about 56 points. The Standard & Poor's, 2659, an 8-point gain. And Bitcoin up about $2,200 today, closing at 16,900. Gold pricing continues to trade under pressure, with most active February's contract currently trading off about $4.20 at $1244.20, as traders and market participants continue to favor a risk-on environment in which we have seen both the S&P 500 as well as the Dow Jones Industrial Average move to new all-time record closes in trading today. On a technical basis, we are currently approaching a 78% retracement, and the retracement that we are looking at is of the most viable rally we saw this year, a $163 rally. A break below this price point, which I believe is quite possible, would put more downside pressure in gold, and our new target would be approximately 1200 to 1206. And that is based upon the lows achieved back in July of this year. Of course, tomorrow will be the beginning of the final FOMC meeting that the Fed will hold in 2017. It will be followed by a statement on Wednesday, along with a press conference, Janet Yellen's final press conference as Fed chairwoman. And although it is widely anticipated that they will announce a rate hike on the conclusion of Wednesday's meeting, but it is the statement that will be released which will offer market participants insight into the Fed stance of interest rate hikes next year, and that, of course, will be of critical importance. Gold has been in a downward spiral really since the end of November, when it touched close to 1,300, 1296 being the tops, and we have seen it decline steadily since that price point. If information gleaned from Wednesday's statements alludes to an aggressive stance by the Federal Reserve in raising interest rates next year, we could easily see more pressure in gold, solid moves to the upside in the dollar, and I would expect to see gold break below this critical level at 1238. Silver also continues to trade under pressure, and my sense is that we will see more downside pressure with the next real support level in silver at around $15.15, and that is based upon the July lows, in the same way that we are basing our current belief that gold will trade to 1200 based upon the lows achieved in that metal back in July of this year. Although we did not officially issue a sell recommendation in gold or silver, we did say that a solid break below the 200-day moving average would be an indicator that we were looking at lower pricing. We do have many of our subscribers that are maintaining short positions in the futures markets, and our recommendation would be to maintain short positions. I would be hard-pressed to recommend any kind of a long play in gold unless we saw some real bounce as it approached this 78% retracement level and had a bounce off of that. Even with a bounce off of that, I would look for that to be a bounce, and all things being equal, specifically, as long as the equities markets continue to trade to new record highs, I would look at that bounce as being short-lived, moving up potentially to the 200-day moving average, and that being upside resistance where it was formerly support. And although we have seen dollar strength recently provide downside pressure on both gold and silver trading. The last couple of days, we have noticed that the movements have been very modest at best, with today's upside move fractional. Although one thing that is worth noting is the fact that we are looking at a dollar index trading above its 50-day moving average. The Dow Jones Industrial Average continues to trade to new record highs as exhibited on this weekly chart. We can see that it is slightly above the close that was achieved on Friday, and we are trading at a new record close at 24,386. Today's rise up about 56 points. And I think that whether or not the Dow and S&P continue to rise are all part and parcel as to whether or not the government does in fact implement some sort of tax relief or tax reform. If in fact they are able to move that into legislation and pass appropriate tax reform, I would expect this trend in the equities markets to continue, along with the downside pressure in the precious metals to continue. And traders, lastly, there is certainly an effect being waged by Bitcoin as futures began to trade on the Chicago's options exchange this last night. And of course, futures contract being offered on the Chicago Mercantile Exchange will begin on the 18th, roughly 1 week from today. Bitcoin futures did move to a new all-time high. Futures are trading over 18,000, and Bitcoin, when you look at it through Bitstamp, currently is trading at 16,835, which is a net gain of over $2,000 on the day. Traders, this risk environment that has been so prevalent in U.S. equities continues to drag the precious metals down. Tomorrow, of course, will be the beginning of the last FOMC meeting of the year, and that will conclude on Wednesday with a statement and then a press conference with Janet Yellen. As long as the Fed stays the course, many believe, including myself, that any interest rate hike that is announced on Wednesday has been factored into the market, but traders will look to glean any kind of information from the statement released on Wednesday as to the course of the Fed next year. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.